Hello and welcome to COP-UN Investment. This analysis is for copper as of 1st of August 2026 with a spot price of $6.26 a pound. The full report is on COP-UN.TO, a hold now and a buy to accumulate for the medium and long term. Copper sits on a genuine 2026 deficit, but the futures ETF still bleeds roll yield in the COMEX contango. The US tariff premium can snap back, and a pro-cyclical metal now faces a China PMI in contraction. Hold short, own the long case in physical, not CPER. Unchanged, hold, buy. On the fundamentals, copper is genuinely tight, the cleanest of the three metals. The annual charge to process concentrate settled at zero, a record low, and spot charges are negative, meaning smelters pay miners for ore. Supply can't respond. Grasberg's full restart has slipped to early 2028, and Cobre Panama is only part restarted. The catch is the demand side, which has cooled. China's manufacturing PMI slipped into contraction at 49.2. But London stocks are the lowest since February, so the deficit is real. Valuation is judged on the global London price, and their copper is now fair rather than cheap. At about $6.26 a pound it sits at, or just above, the $5.50 to $6 band. New mines need to break ground, so the below incentive cushion it carried in the spring is spent. It's still comfortably above the 90th percentile cost floor, nowhere near distress. Copper is priced where it needs to be to eventually unlock new supply. The structural bull is that supply still can't respond. The American price is richer by the tariff premium. Here's the catch that keeps the short-term call a hold. American copper futures are in contango. Each further out contract costs more because the market prices a proposed tariff into forward months. The popular copper ETF holds those futures, so it bleeds roll yield. You lose money rolling the position even if the metal goes nowhere. Speculative positioning has actually eased, with managed money longs down to about 67,000 from 74. So it's less crowded than it was. The metals trend is fine, the vehicle is the problem, which is why you own physical. The risks run through the tariff, the cycle, and the vehicle. If the refined tariff is rejected or delayed, the American premium collapses and that 640,000-ton warehouse overhang floods back to London. The 2025 precedent was a 20% drop in under a month. A pro-cyclical metal is hostage to the cycle, and the cycle just turned. China's PMI is in contraction, and US second quarter growth missed at 1.5%. And even if the metal holds, the futures ETF keeps bleeding roll yield in this contango. These are the engine of the short-term hold. Now weigh the risk against the reward. The bull case is roughly 15% above today. The base case, the most likely, about 2%. And the bear case, a fall of about 14%. So you are risking about 14 to make 15. So, our call on copper, hold. Remember, this is for education, not financial advice. Always do your own research. This analysis is by COP-UN Investment at COP-UN.TO. The link to the full report is in the notes below. Have a great day.